What's going on, everybody? It's your boy C-Zar, and we are talking about compound today at the request of Harshit. Hit that like button, subscribe if you want to see more content like this, and let's get into the video, my friends. All right, here we are sitting at about $84.55. It does appear to me that compound was in this kind of downward sloping trend, right here. And it's like we've broken out of it, right? It does look like we've broken out of it. I want to draw an actual straight line. It's really easy to fold a line like that to where you want it to be. Nope, it was pretty damn perfect. Yeah, we've broken out of this. This couldn't be a cleaner break, man. The only thing that's missing really is volume. I want to see, do we have volume? Maybe on a different chart. Was it on the USDT pair? I mean, there's more volume. Yeah, okay. Oh, yeah, there it is. Okay, cool. Look at that, yeah. It was on Binance. Binance had a lot more volume, right? And more volume on the red still here at the top. But which probably tells me we pull back a little bit. We'll get into that in a second, but hold on. 19K compound versus here is 2K, and that's barely above average. Look at how it's barely above the histogram, where here that's a decent bit above the histogram. That's the most volume we've seen since like the 24th of December, since Christmas Eve. Where here that's not a lot at all. So yeah, anyways, that's good. So this move did happen with somewhat significant volume, above average volume, and it looks perfect. It really does. Like all this moving up like this, consolidating right before the break and then breaking out. Being that we are finding resistance here, being that we did get more volume here at the top, at the areas of resistance, right? Generally, when you get volume at areas like this, you would either break out or pull back, right? And likely because we haven't continued, we likely do pull back. My assumption would be we pull back to this line probably. Right? I mean, we could pull back rather aggressively. We don't have to go all the way back to that line. Let's just throw some fibs on here, though, and see if anything makes sense from a high to or a low to a high. I mean, yeah, you could go all the way down to your 618. Maybe we spend this weekend, and then by Sunday, sometime on Sunday, early Sunday, we're down here. You're finding support there on your golden ratio, which is also previous areas of support going back here, support, resistance, support, support, support. I bet compound, I bet you do go down to 77 bucks, man. You're at $84 now. I bet you go down to 77 bucks. And if you don't, that's fine. You don't have to. But that's my call at the moment. Let's see if we can make sense out of this too. 4-hour time frame. Pretty overbought, getting out of it. Not enough. I mean, it looks more bullish than bearish, to be fair. Let's look at the 1 hour. 1 hour double top. Yeah, that actually looks a little bit fierce, to be fair. Says you could go a little bit higher, but more likely than not, you probably have found a relative high here. And then just this, pulling all the way back down to previous areas of resistance, previous areas of support, something like that maybe. Yeah, I don't know, man. I like that $77, $78 area personally. That sounds about right to me. So you probably spend the weekend doing that, is my thoughts. And then next week, after you've back tested this, you'll open up next week, starting to move up, getting above $100 again, and starting to see new session highs above 140 and moving upwards and onwards to prices that are at like $200, $300 and beyond, right? Let's see here. Yeah, I like where you pulled back. I like everything about it, man. It looks fine. Weekly RSI too looks really good. Yeah, looks ferocious, man. I'll tell you what, getting overbought like this, pulling back below the 60, holding support down here, and then getting back into the overbought zone without getting below the 50, without going to these lower readings like you did here when you got overbought, you went down here, or like here you got overbought and then you went down here. Finding support in these upper areas, right? Getting below 60 for like a week or two and then getting back above it while being deeply overbought like this and then getting overbought again, that tends to promote very strong movements. And all I'm trying to say by that is that if you enjoyed this move, what this RSI is indicating or suggesting right now, in my opinion, just from my personal experience, would be that the next move to follow is going to be bigger, right? So if that was 262, then from the relative low to the relative high, I think we could expect a move that's bigger than that, right? That's at 248, 250 basically, right? If we draw a fib from an overall high to an overall low, come on now, right there. I mean, that puts you right at your golden ratio, right there, right at previous areas of support, previous areas of resistance. That could be where you go, right there. If not there, then higher would be my guess, right? 786 or more. You absolutely could see that area, anywhere from about $400, $420 to about $610 there, if you don't stop at this 230 to $300 area. But there's a lot of reasons to stop in that 230 to $300 area. You've been at kind of a slow pace breaking out of here. It wasn't quite the eruptive move that we were looking for. Bitcoin stalled out. The rest of the altcoin market kind of stalled out. You know, who knows? It was the end of the year. But I am a little bit skeptical. I've been calling for the 786, 886 zone in optimism and genuine expectations that we'd see that. Now I'm a little bit more cautious. We've always talked about the 235 to 304 area, but there's been reasons to be more excited for this zone in a shorter amount of time. Now, however, with December's price action, I think considering this as our next target zone, something between 235 and 305, it's probably a likely target area. I don't think we'd move up to 600, but if we did blow past the 618 zone, the golden ratio zone, we probably do stop right around 420, somewhere in that time, somewhere in that price range. I want to look and see. That's not a good example of what I'm trying to find. You were overbought here, deep as hell. You got below the 60 for just a week, and then you came back above it, and you got into the overbought zone again, right? And I was just talking about how this is the same setup kind of that you have over here and how bullish that is. Well, this time, however, the move up afterwards was not as aggressive as the move up before, right? Relative low to relative high, you moved up 372%. We're here, relative low to relative high, you're only up 177%. But you had bearish divergence. You were building prices higher with volume decreasing, right? End of cycle, all kinds of stuff. More of like the beginning of the cycle for you now. It's just different circumstances. So I was trying to find an example of that, but that one kind of backfired. Let's see. Maybe we've got something on like Bitcoin. I just want to see, just for like a comparison's sake. It's nice to get these when you see them, right? And then that way I'm not cherry picking either. It's just something that's more or less obvious. That kind of works there because you got overbought and then you came down and then you got more overbought. That kind of works there, actually. I mean, you can see it, right? Small move to begin it with your overbought zone. Pulled back, got below your 60 for a little bit, but you didn't even go that low, right? Didn't even get below your 50, and the move afterwards was huge. But I feel like that's not necessarily appropriate for what we're going for. Maybe this, right? This kind of stuff. This is what I'm talking about, right? Stuff like this, where you're getting into the overbought zone, but you're not pulling below the 50. Really, if you get below the 60 at all, it's brief, if at all. And then those promote stronger moves. And as you see this, right, if you look at the RSI here, this move up, that's nice, but it took longer to form than this move up here. Right, and then in the same amount of time, more or less, you were at higher prices here, and then you continue. It was actually a stronger move as it goes on, right? I don't know. It's not perfect. It's not perfect. All I'm trying to say is that it suggests, this RSI is suggestive that this next move, if not on par with what we've seen already, it could be bigger. And if it were to be bigger than this most recent move, then likely that would put us above $240, right? Something like that. It'd put us above 240. And throw on top of that, besides the weekly RSI looking the way it does, throw on top of it the fact that we'd be breaking out of this consolidation range for real, right? Retracing this overall range for real, we absolutely could see a larger move. So even though the target, I would say that the more or less realistic target expectations would be something between about like $245 and $305. I think that's a more realistic target expectation by the end of February, if not by the end of January. It's completely acceptable, I think, to consider targets that are around 420 as well. But maybe not as high as like $600, but around 420, I think could happen in that same amount of time by the end of January, by the end of February, whenever this moves over. It just remains to be seen. But I got nothing else to say, guys. I think I'm running out of steam here, so I'm going to end the video. We broke out. I bet we back test. We're at 84.73 now. I bet we pull back to $77. After that, it's nothing but upside, and I'll see you on the next one. Hit the like button, subscribe. Bye-bye.